Hi guys, Max here, and this is your update for yesterday, the 6th of January. We saw another crypto rout, another red day for US stocks, although only slightly, and then some madness in Kazakhstan and a couple other things, so let's just get right into it. So what actually happened with the markets? Well, American stocks were down, but only by a little bit. A few negative basis points on both the Nasdaq and the S&P 500. Overnight futures, though, are looking a little bit worse, with the Nasdaq's futures being down about 0.4%. European markets had a little bit of a tumble as well, with the Stoxx 600 dropping just over 1% across the day. Asia and emerging markets in general fared a little bit better, rising by 0.5%. The dollar fell a very small amount. Bond yields in the US and in most other major markets as well were pretty consistent, though, holding on to the gains that they'd made in recent years. Now, oil prices have risen a fair bit and are now sitting just above $82 a barrel, and gold has fallen a little bit, sitting just below $1,800 an ounce. Crypto had a pretty awful couple of days, with another big drop yesterday, which saw Bitcoin drop down to almost $41,000 before rising back up just above $42,000. Now, needless to say, it's not been a good week for Bitcoin maxis. There was a lot of talk of $50,000 being the main point of resistance for Bitcoin a few weeks ago, and then it fell to $48,000, and then that was touted as the new low before the next bull run. But here we are far below that point today, about 40% off from the peaks that we saw earlier in the year, and with risk sentiment changing, it's looking like new all-time highs anytime soon are a little bit unlikely. Now, in short, this is really just more of the day before. Sentiment and risk tolerance is decreasing a little bit, but mostly staying consistent with the prior couple days. And we went pretty in depth into everything that happened with the Fed and the minutes from the Federal Open Market Committee the other day. So if you want lots of detail, check out yesterday's video. I'll link it down below in the description. For today, though, the gist of it is really simple. Investors are expecting the Fed's balance sheet to decrease in 2022, which means the Fed will sell assets, and that will take liquidity out from the markets and cause prices to fall. Investors are also expecting interest rates to rise, which increases the cost of capital and makes growing a business, or even just running a business, more expensive. It damages earnings potential, so valuations for stocks as a whole are coming down, and this is really focused on those companies that are very highly valued, that have high price to earnings or high price to sales ratios. They're getting hit the hardest because the macroeconomic and monetary environment is just going to be very difficult for them in particular. Now, crypto is falling for a similar reason, mostly related to the same stuff about risk sentiment and investor sentiment, but it's not quite identical, and there are a couple other nuances. Basically, though, it boils down to the fact that crypto is a risk-on asset, and in this new environment of higher interest rates and a hawkish Fed, capital is going to need to be reallocated to get rid of some debt because interest rates are going to rise, so obviously that debt is going to get more expensive, and most investors will start by selling their riskiest assets first, which these days means Bitcoin and other crypto. Then we have the standard positive feedback loop of liquidations, which is when, as the price of crypto falls, you get liquidations, where people who trade on margin or with debt find themselves out of money when the price of the crypto has fallen. So the brokerage, the app, or whatever they're using to trade sells their positions automatically to pay off their debts. This increases selling pressure on the market and causes the price to fall further, which then often causes more liquidations to occur. Obviously, this can spiral down and it can lead to really huge losses, and it's one of the reasons that crypto is so volatile, especially when it is crashing. But this isn't a rare thing in crypto. It happens all of the time. It's happened hundreds of times before and will happen thousands of times again in the future. But over the last few days, it has added to this downward pressure on Bitcoin and the other crypto markets. Finally, though, there is some stuff going on in Kazakhstan which is probably affecting the price of crypto as well, but that's going to need some more context. So first, I'll explain what's actually going on over there. Now, Kazakhstan is seeing a fair amount of civil unrest that was triggered by a government decision to lift a cap on fuel prices, which effectively made fuel more expensive for its citizens. Protests started a few days ago all over the country, and while it started off as a protest about that specific development, fuel prices rising, they about doubled as this price cap was removed. As is so often the case with protests like these, they evolved into a broader movement that has a lot of complaints and lots of anger directed in lots of different places. But in general, it's anger and discontent with the government and their decisions. Now, these protests have started to get violent. Whether it's the protesters or police who started the violence isn't really clear, but what is clear is that it's gotten really violent. Dozens of protesters have been killed and at least 12 police officers have been killed as well, so it is escalating pretty badly. There have been lots of pictures and footage emerging of burning cars and burning buildings, mass fights between protesters and security forces, protesters storming government buildings, and the National Guard equivalent from Kazakhstan is on the streets trying to quell everything as well. Now, after a few days of this, the government of Kazakhstan actually resigned. They handed their resignation in to the president and they turned back the rule on fuel price caps, cutting the price of fuel down by about 50%. But as I mentioned earlier, the protests are no longer just about fuel prices. They're now about a whole myriad of other things. Protesters took control of the main airport in the capital city and a state of emergency has been declared all over the country. Now, Putin, obviously from Russia, Lukashenko from Belarus, and the president of Kazakhstan all had a phone call and decided that some Russian army elements and a couple other military elements ought to go and take back control of the airport and maybe just help out the government in Kazakhstan a little bit. Now, Russia put out a statement claiming that no one should interfere with Kazakhstan, they should deal with everything internally, and they also claimed that they aren't interfering either, but Russian military planes have been landing in Almaty, the capital, so of course it's very likely that they're just lying as is usual. They already have troops and military equipment on the ground in Kazakhstan assisting the government there. Now, all in all, there's a big mess over there, and it mostly comes down to fuel prices on top of an already existent energy crisis. Now, how does this impact Bitcoin and the crypto markets? Well, Kazakhstan is the third largest Bitcoin mining country in the world. And this is mostly due to the fact that there's been a lot of migration from mining operations from China to Kazakhstan over the last few years, as China's crackdown on crypto has strengthened. Now, the hash rate of Bitcoin, basically how much mining is going on around the world, has dipped a fair amount as a result of this crisis in Kazakhstan, and that has shaken confidence in Bitcoin and crypto in general. Now, to be perfectly honest, this isn't actually a huge problem for Bitcoin. There is still plenty of activity in other countries around the rest of the world for the system to continue running without actually a huge amount of problems. But this is scaring people in general and just shaking the markets in general, which has contributed to the price declines seen in Bitcoin over the last few days. Now, is this situation going to get better? Well, probably yes. Tensions will likely start to ease and life over there will probably return back to normal, albeit normality under a dictatorial regime. Obviously, a full-on revolution is pretty unlikely. Those are very rare, especially with Russia supporting the Kazakh government. But of course, there is always a chance it gets worse as well. There are a couple other things that might actually impact us over in the West. A couple other commodities come in large parts from Kazakhstan, so we are starting to see tightening supply of those, which include uranium and copper, which is obviously not great for inflation all over the world. Oil production in the country has been damaged by the unrest, which will make it more difficult for the country itself to satisfy demand. But to be honest, that shouldn't really impact the rest of the world too much at all, maybe just cause the price of Brent crude oil to go up by a few dollars. Now, Turkey and China have both come out on their own and offered their support for the Kazakh government, along with Russia and Belarus, of course, creating a little group of dictatorial countries that are clearly all aware of how support of one another is essential in staying in power themselves. Now, over to China, and we have a little bit more drama in the property industry, this time with Shimao, one of those billion-dollar developers who are unable to pay their debt. Now, a couple of weeks ago, actually on Christmas Day itself, I believe, the company failed to pay $100 million that was due to a creditor. Of course, this wasn't good news, but it's not exactly unexpected either. Contagion is well and truly underway, and we've been watching it develop here on the channel for months now and reporting on it the whole way through. Now, as expected, the company's bonds have fallen dramatically in price, as have the company's shares, because why would you want to own shares or bonds from a company that can't pay its debt and will go bankrupt within a few months? Well, the company came out with a statement and basically tried to gaslight the entire world. They said that their failure to repay the loan will not scare investors and it won't trigger demands for accelerated repayments of their other debts either. Of course, that sounds great, doesn't it? But Shimao doesn't have control over the entire bond market in China, their fears and their desires, so this really doesn't mean anything. This is the financial equivalent to me robbing a bank and just telling people that, no, the police won't actually arrest me, so it'll all be fine and my mother should stop worrying. There are, of course, though, more problems emerging in the property industry in China, companies that we haven't really talked about before on the channel, because up until now, they hadn't shown any signs of being in real trouble, and they are starting to look like they're now in trouble. Dafa and Ayuan are two new names who look like they've been in a bit of trouble. It does look like the CCP is finally grasping the severity of the problems in the markets, and they're starting to go back on their stated aims of allowing businesses to fail. They are changing the three red lines policy to be more lenient, and they're excluding debt from mergers and acquisitions to try and ease the pressures on some of these woefully run companies. Of course, China is also still struggling with the virus and their ineffective vaccines. Small outbreaks of cases are being met with lockdowns that cover millions of people and completely destroy consumer demand and spending, impacting their already struggling economy. Now, Bloomberg recently came out with a report that says that retail sales growth could fall by as low as 3.7% this year, down from 10% from the previous estimates. This whole ordeal will also likely worsen the rest of the world's supply chain crisis as well, and inflation problems, as there are going to be more major delays added to goods and commodity productions from China as lockdowns continue. Now, in crazy stocks news, GameStop shares jumped up 29% in one day on news that GameStop will be creating an online NFT marketplace for skins and things like that for gaming in the future. Now, I've been fairly critical of NFTs recently, basically because 99% of everything out there is utter rubbish, a sign that we're in the greatest speculative bubble of all time, and often just a scam. But this news is actually bullish, a great idea, and is not just the result of hype and a bubble. Even the gaming and NFT craze in general is mostly hype, with companies that are in this area mostly focusing on just selling their crap coins to investors as opposed to building great games first. But this marketplace has huge potential, and their potential is best interpreted as being the future of Steam's marketplace, where you have been able to buy and sell skins for years now. Yes, the NFT aspect of it is all just a little bit of a gimmick, and this idea could be easily achieved without having to ever bother with crypto or blockchain or anything like that. But the idea of individual and unique skins is great and could actually add a whole lot of value to the marketplace when you consider the fact that people will want to own skins used by specific pro players or for specific moments or events. The idea here, in theory at least, is great, but I do have some serious doubts about GameStop's ability to build this platform given how outside of their comfort zone it is, but I will be happily watching them chug along with this product. I don't play video games anymore, I just don't have the time, but as a kid and a teenager, I spent huge amounts of time on CSGO, and the marketplace for skins there was absolutely awesome, and if GameStop can manage to replicate that, but for multiple games, then I think they could see some real success with this. Now, some other news, which isn't really big news, but I do think is quite cool, is that VW Volkswagen, the European car manufacturer, is going to be finally unveiling the VW Buzz, an electric revamp of the iconic VW campervan, and I personally cannot wait to see it. I have a particular affinity for retro and old cars, and I love the idea of a modern electric campervan that looks like an old VW campervan. Now, to be perfectly honest, as someone who loves cars, this is the only electric car I've ever actually been excited to see. VW as a company is actually very well run, and it is pretty much the only auto stock that I've considered buying, and if 2022 goes in a certain direction, I just might end up buying some VW stock after all. That is it for the day. I'll see you all tomorrow. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. Finally, there's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.